Hey EKFG fam, Aaron here from EK Financial Group and another update for our Weinberg portfolio. So this is for quarter four for 2021. So I hope you guys are enjoying the start of 2022. So far I'm pretty optimistic about what the future holds. Been a bit of a rocky start to the markets in late January, early Feb. But I think what we've got structured for you guys is going to have that long-term approach and really good view going forward. So let's get into the December Q4 update for 2021. So pretty much, look, equity markets went from strength to strength over this quarter as ultra-high economy of monetary policy and ongoing physical stimulus and vaccine optimism converged to keep powering the bull markets higher. Even renewed restrictions and the Omicron 2019 variant, inflation jitters and a weakening Chinese economy really failed to dent investors' enthusiasm and optimism. So end of last year was really solid and positive. However, look, we did see the beginning of some healthy volatility return to markets, particularly around the who's labeling the Omicron strain a variant of concern. So this prompted overseas markets to log their worst trading day of the year. And fortunately, the pessimism was short-lived as Omicron proved to be more transmissible but yet less deadly. So, this affirmation was all the markets needed to finish the year strong, with overseas and domestic markets generating annual returns of 29% and 17% respectively, which is outstanding. At home, the Australian market delivered another quarter of positive performance, despite COVID-19 caseloads hitting record highs, supply chain bottlenecks worsening and the growing percentage of the labour force in isolation. Pleasingly, however, the economy did appear to emerge relatively unscathed from the lengthy lockdowns in Vic and New South Wales, with the unemployment rate dropping to 4.6%. So look, over the quarter, we did undertake a comprehensive review of the international share portfolios and we made some adjustments to improve the risk and return profile. So most notably, we introduced a fund called L1 Capital International Fund, which historically has protected capital in falling markets while still performing really strong in rising markets as well. We also took the opportunity to introduce a dedicated global small caps allocation, which enhances the portfolio's diversification, whilst also introducing additional avenue to generate attractive returns. Strongest performers, so let's look at the performance for the quarter. So the best performers over the quarter was Resolution Capital, Global Property Securities Fund, which notably and impressively made a 12% return for the quarter alone. So, following closely on the heels was the iShares Australian Listed Property Index Fund, which delivered a quarter return of 10%. What both funds have in common is that they do invest in listed property assets, which has rebounded really strongly as economies have opened back up and consumers are again visiting shopping malls and shopping centres and returning to the office. Another area which was initially disproportionately impacted in the early stages of COVID was the infrastructure sector. However, this too is now generating strong performance as airports open back up and travellers return to skies and toll roads once again, seeing increased traffic. This resulted in a fund called Clearbridge Rare Infrastructure Fund being the third best performing strategy of the quarter, which generated 8%. So as you can see, there's a common theme there of property and infrastructure have done really well the last quarter as things are opening back up and people return to work, airports are going in. I've got a flight booked to Fiji with the family in April over Easter. So people are more, not so concerned with travelling as much, and people are definitely wanting to get back out there and see the world and see part of Australia. So look, as you can see, not all sectors outperform simultaneously, which is why we carefully diversify our portfolios across fund managers, asset classes, geographic locations, and also different stocks. We believe this provides the best opportunity to generate, attractive returns while minimizing losses during periods of market weakness. At our next review, we're going to dissect our alternative sleeve makeup, and our strategic asset allocation to ensure that our portfolios are optimally placed to ride through any unforeseen volatility markets that may come through in this next 12 months, while still delivering strong risk-adjusted returns for investors. So look, that's a bit of an update, really quick and brief for 2021 December quarter, so the end of the year last year. So looking forward to 2022. I've got a committee meeting for Q1 2022 this Friday, so we'll be posting out shortly the updates for that quarter and what changes we might be making. So thanks for tuning in. Happy to see you all and hopefully see you soon face to face. Thanks guys. Bye.